Good evening, everyone. In today's webinar, we will see how you can put this whole can slim strategy when it comes to your investing. So, putting it all together when it comes to buying, selling, and even taking home your profits and also cutting your losses. So, let's proceed anyway. Before we shall proceed with the presentation, I would suggest you look at this disclaimer. Give me some time here. So whatever we are speaking today, it's not any recommendation to buy or sell any security, and whatever we are telling is purely for educational purposes only. Okay. So before we get to the crux of the presentation, so this is we want to take you through how the market has moved over the last 2 weeks, our last webinar. So last 2 weeks have been actually quite eventful for the market. So when we spoke last time on June 27th, so
Yeah, so on the home page, you'll be seeing market condition. At MarketSmith India, we basically follow four market statuses, that those are confirmed uptrend and uptrend under pressure, market in correction, and rally attempt. So an investor is ideally expect to take a position in new stock when the market is in a confirmed uptrend. So confirmed uptrend, to basically give a brief overview of what a confirmed uptrend is. It is market direction when the stocks are reaching new highs and the stocks are trending upwards. The key indices, for example, now we see that the Nifty and Sensex are both trading at all-time highs. It basically shows that the overall market strength, the underlying market strength is really strong, and the trend of the stocks is also upwards. So this is nothing but a confirmed uptrend. So it is ideal to take new positions when the market condition is in a confirmed uptrend. So next status that I would like to talk of is the uptrend under pressure. So once the market is in an uptrend, we count distribution days. So distribution day is nothing but a day on which the benchmark index falls by 0.2% on a high volume than the previous day. So basically, it's a day where the index declines by 0.2% on higher volume than the previous trading session. So once this happens, we record a distribution day. So when we see that there are a lot of distribution days accumulating, that is when we tend to move the market condition into under pressure. So that is where the investors have to be a bit cautious, because markets are starting to show some weakness, and it is the time when we have to take really cautious steps, and we have to avoid taking investing in stocks which are showing some technical weakness as well as fundamentally weak stocks. This is the time when we have to be careful. So right after that, we see the distribution day count piling up, and the index has recorded a lot of distribution days. That is when we would like to move it to correction. Correction is a stage when the market is touching new lows and the overall trend of the market is downward. So the stocks are not performing well. We see that there's a lot of resistance the stocks are going through, and that generally it happens when there is some weakness in the economy. So when there's a lot of distribution day count, and also when the stocks are not able to reach new heights, that is when we move it to correction. So at this stage of market, we would not recommend the investors to take any steps. And also positions which they're already holding, we would suggest investors should book profits or losses in those positions, because this is where the markets might be really weak and can go further down. So this is where we might have to be a bit cautious and end all our positions. So next step is rally attempt. So rally attempt is a stage when the market revives from a correction. So when we see there's some strength in the market and they're trying to move above its support levels, and we see that the trend is reversing, that is when we consider this rally attempt market condition. So this is a condition where investors can look for stocks, hunt stocks. Basically, in this condition, we would like to keep a watch on all the leading stocks. This is when the stocks slowly start to move upwards and move towards their pivot level and show some improvement in its base pattern. So around this time, investors should be looking out for good quality stocks. Those are the stocks which are showing good earnings in the past few quarters and annually as well. So this is the time you have to identify these stocks and maintain a watch list of such stocks, and then wait for a proper breakout before taking a position. So once the market is in rally attempt, that is when when the market is in rally attempt and you see that the index, the benchmark index rises about 1.5% on good volumes, that is nothing but a follow through day. So follow through day is nothing but it is basically confirming our view that the market is in an uptrend now. So when the market is in rally attempt and the benchmark index moves by 1.5%, that is when we move it to confirmed uptrend. So this is overall currently, even if you see now the Indian market condition is in a confirmed uptrend, it is basically a green signal for all the investors to take new investments and hunt out for stocks which are showing some strength. So investors would not want to miss out on opportunities when the market is in a confirmed uptrend. So and ideally, it would be really profitable for investors who take new positions when the market is newly moved into a confirmed uptrend. That is when the stocks start to make new highs and start to break out of their consolidation patterns. So that is a stage in markets when investors would ideally like to take new positions. So how would you know if about the market condition? So as soon as you log into the MarketSmith application, on the homepage itself, you will see on top the market condition. So currently it is in a confirmed uptrend, so it will show up here. Also, in our daily big picture, we give our outlook on how the market condition is and the number of distribution day counts and how far is it from moving it to different market condition altogether. So that is about market condition. If you have any doubts, please post it onto the chat. We can take queries as and when they come. Okay, so moving on to the next step now. So once you have noticed that the market condition is favorable for us to take new positions, that is when we have to dig down further. So there are about 4,000 odd stocks in Indian market. So you don't have to sit down and go through each and every stock and look at the stocks which are showing fundamental strength. So MarketSmith app makes it easier for you. There are basically a few lists on the MarketSmith app that is under the portfolio section, where you can find different lists where we list down the stocks which are actionable and which show some really good price volume action. So speaking of the first thing, that is the top stocks India 47 list. So it is in India 47, IND 47. It is famously known as IND 47. This is a list where it's a algorithmically generated chart. Every Friday, the algorithm basically selects the stocks which have shown really good price strength in that particular week, and it is a list of top 47 stocks. So these are basically the stocks where you can identify the big winners, basically the stocks which are making new highs and are showing a lot of strength. There's a lot of demand for these stocks. So this is the list where you find the stocks which are showing some price volume action. However, these are not the stocks that are recommended by us, because this is just a algorithmically generated chart. However, we'll have to dig down further and look at how the stock's fundamentals are and how is it doing technically. However, in this list, we would find the stocks which are showing some nice strength. Moving on, we have the next list, that is the India Model Portfolio tab, wherein we have all the stocks that we recommend. The research team at MarketSmith India basically researches on individual stocks and looks at the growth story and the fundamental and technical aspect of the stock. So this is the list where we have all the stocks which are recommended by the research team, and we also have detailed research reports on these stocks, which investors can go through and see how the stocks have been performing and our outlook for the stock. So after you find a stock which looks interesting, that is when you can go into the stock from the list. Basically, the list has a number of stocks in it. So once you look at a stock that is looking good, you can go onto the stock, and there are different tabs on the stock page where you can evaluate the stock. So there are four different tabs. One is the evaluation tab, the details tab, the related tab, and checklist tab. So in the evaluation chart, you basically see a chart which is showing price and volume details of that particular stock in the past few days, months, or weeks as well. So basically, you can toggle through a daily, weekly, and monthly chart to see the price volume action during that period. On the details tab, it will give you a detailed picture of the financial condition of the stock. On the related tab, you will see all the stocks that are related to this particular stock. That is the stocks which are there in that particular sector. You will see all the stocks under this. And finally, on the checklist, you can see our the stocks CanSlim meeting criteria. So on this checklist, we will quickly show up all the conditions that the stock is meeting and how far is it complying with the CanSlim methodology. So if you can see this is the evaluation tab. So over here, basically you can see the technical. On this, it is easier for us to analyze this stock technically. So here it shows a stock if it is making a pattern and how far is it from its pivot, and what is the return it has given us since some time. And also here, if you can observe, this is the volumes section where you'll have the volume details of a stock. So this is an ideal evaluation tab is an ideal place where you can find where you can pick the stocks technically.
So this is the review ratings and performance analysis using the MSI, which you can find the MSI details tab. So once you click on the details, you would get this picture. So this is an example of a Indian stock called Piramal Healthcare. So here you would find the basic information about this stock. Here you can see the market capitalization, sales, the number of shares floating, then the yield, book value, up down volume ratio. Now coming here, you can see the year-wise EPS change, the high and low price, the master score. So this master score, EPS rating, price strength, AD rating, and group strength. So this chart is one of the most important chart when you evaluate any stock you should look forward to. So for this, we see the master score of this particular stock is 75. Then the EPS rating is 53. The AD rating, if you see, is B plus. The group strength is 130 out of 197. And then you have the quarterly earnings table where you can see the quarterly earnings change and the absolute figure as well as the change, and same for the sales. So this is for the consolidated. This is on the consolidated basis. You can even see for the standalone basis on clicking on this standalone tab. So the final step would be to take action. Once you have evaluated any stock, checked everything about that in our details and evaluation tab, checklist tab, and then after and did some in-depth research about the stock, then you should then comes the then what should be your action. So if you can either buy the stock, or if you are not convinced about the stock right now, or and but you are convinced that in future that stock could show some good run, or there could be some you expect any good news for the stock, then you can just add it to your watch list. So before you buy any stock, just make sure that you are familiar with the company, you understand the business model of the company, what it does, and what and in which sector the company operates. You should be familiar with these company specific details. Then you should look for the canceling trades in the stock, whether the stock has most of the canceling criteria or not. That would be very important to identify the good quality stocks which can have a good run going forward. And the most important thing which you should observe in any stock in which you are about to take action is the proper, whether the stock is at a proper buy point or not. Because we have seen that if we buy any stock which is out of the buying range, if it has already had a good run, then getting buying that stock at that particular time could be very risky, because it has had all the runs which it was supposed to get. So if you are not opting to buy the stock because you are not convinced with the story presently, but you feel the future, but you are very optimistic about this stock and into future, what you could do is you could add that particular stock to your watch list. So later we'll show you how can you add that whatever things you need to consider when you prepare a watch list. So this is an example of Piramal Enterprise where we'll show how did we identify Piramal using the 4-step routine which we just spoke a couple of minutes ago. So in the first we observe the market direction from our app, so which was market was in confirmed uptrend. So we are talking about we are going back to March 29th 2016 when the this particular stock broke out. So that time the market was in confirmed uptrend, and the follow through day signaled start of a new uptrend. So this is a chart of Piramal. So after that after scanning through the idea list and features in MarketSmith India for new stocks, so this particular stock displayed a strong price strength. So this is the portion, this red part, where this is showing the stock performance before market was moved to confirmed uptrend. And after, and this is the as we can see, the stock is making a double bottom base, and post rally what was the performance. We'll look into the details in some time. So how did the stock, what was the actual return which stock gave post breakout? Yeah. So here we talk about how do you evaluate your stock ideas. So that in that evaluation tab, which we just showed you in one of our previous slide, you get the fundamental story about the company. So in that you should check about the EPS rating, the price strength, the buyer demand rating, last quarter EPS growth, which should be ideally double digit for the past 2 quarters basically, and the last quarter sales growth which should also be double digit. So this is the chart of Piramal. As we can see, the stock made a double bottom and then it broke out here. Sorry, it broke out here. The volumes were above average, and it had a good run going forward. So this chart shows you the price and volume action. Why do we say that once a stock breaks out of a sound base pattern, the volumes should be high? Ideally, the volume should be 50% more than the above average volume. So here MSI we noted how Piramal Enterprises was near a potential buy point, and we were watching this stock at that particular point of time. So after we had evaluated the stock and we were convinced with the fundamentals, we dig into the company's story. So there we found we look for the N factor in CanSlim. We wanted to be very convinced about the company so that it could give us a good return going forward. So we found that company at that particular point of time, company was getting into structured finance business, And this structured finance segment has helped the company to grow its loan book it helped the company to grow its loan book, and it was one of the major revenue generating segment for the company that particular point of time. So once we were convinced about the company, looking to the story, then we were pretty much sure that if the stock give us a good entry point, and if it breaks out of a sound base pattern, we are going to add that. So this is what happened on 29th March 2016. So Piramal Enterprises broke out of the double bottom chart pattern, as you can see here. So it broke out here, the volumes were high, and after that the result is what you can see in this particular slide. The stock gained 152% after breaking out from a double bottom base pattern. So this is what it can give you if you just identify good quality stocks using canceling parameter well ahead in time. Just keep a close look towards the stock which are nearby point, dig into the story if you are convinced with the story and it gives you a proper entry point and you are able to take action. Pyramid is just one of the examples where it ran almost more than 150% over the time.
Now that we have gone through an example, let us quickly go through how to create a watch list of stock and maintain the watch list. Watch list is very important in investment before investing, because it will basically give us an idea of how to go forward and what is the entry point and what are the stocks to identify. On MarketSmith application, you have a tool where you can add stocks to your portfolio, that is my portfolio list, where you can observe stocks and see how they have been moving. So to prepare a watch list, the first step we have to follow is prepare an Excel sheet and jot down take down all the stocks that have been performing good fundamentally. List down all the stocks and look up the charts on the MarketSmith application and make few entry points. So basically you can make three tabs. One is the stocks which you own currently. So there you can mention all the stocks at points which you have purchased and current holding position. That is it if it's a gain or it's a loss. It will basically help you to filter down the stocks which are nearing the profit booking range or which are hitting the stop loss range of 8%. So the next screen which you can look at is the radar screen. In the radar screen, in the radar chart, you can basically take down all the stocks which are looking interesting and which are your potential buys. So first and foremost, we'll have to look at all the stocks which are doing fundamentally good and technically are showing some strength. So these are the stocks which are going through some consolidation, because we would ideally suggest investors to take positions when there is a strong breakout. So identify stocks that have delivered good results in the past 2 quarters and also annually, and note them down on Excel sheet and see how far are they away from the from breakout. So this is what you have to mention on the radar screen. Next is the ready screen. So once you identify the stocks that are fundamentally strong, look at the stocks which are very close to their buy points, that are maybe like 1 to 2% below their pivot. So that are the stocks which are going to break out of resistance and consolidation, and that is when they might have a good run. That is about generally at our research we've identified that fundamentally good stocks tend to run about 20 to 25% post its breakout and again tend to consolidate from there on. So always look for stocks that are showing some consolidation with strong fundamental basis, and note down those stocks and mention the entry points in the same list. Basically, this list will give you an idea of what are the stocks that you might exercise in the coming week. These are a few tips basically to manage watch lists. Don't keep too many stocks into the watch list. Basically, if you have about 5 to, it is advisable that when the market condition is in confirmed uptrend, jot down stocks, about 5 to 7 stocks ideally, which are fundamentally strong and which are nearing to breakout. So these are the stocks that you have to keep on your radar list and monitor them. Maybe like on the weekend you can filter all the stocks. It basically takes about 1 hour's time or so from your weekend. Jot down all the stocks that are showing some good strength because of their fundamental basis. So mention all these stocks and also identify the buy points, that is a pivot level. Keep these stocks on your radar list, and as and when the stock breaks out, you can exercise a position in these stocks. Also, remember to weed out your watch list, because as we see now that the earning season is coming, we might have a few stocks that are there on our watch list because of its past good performance. However, if the current earnings, that is the Q1 financial year 2018 earnings, are not up to the mark, and if they're not meeting consensus estimates, or even if they are negative, then that might cause a huge sell-off for the stock. So those are the stocks we have to identify and we have to weed out regularly, and keep updated with the financial position of the stock. So, as I told you earlier, it basically takes 1 hour of your weekend to maintain a watch list. On a weekend, you can see what are the stocks that are doing fundamentally strong, and note on all the stocks, and look at the chart patterns and see the stocks which are going to break out in the coming week. Don't keep too many stocks in the list, because you might miss out on the stocks which are nearing buy point. It is always suggested that take positions when a stock breaks out, because most of the good stocks, before they have a good run, they tend to consolidate for a while, because the stock needs some demand. That is when the price moves further up. So it is the stock fundamentally stock. However good the fundamentals of a stock might be, there is this phase of a stock that is maybe like, it can even be 1 month, 2 months, or 3 months, but they tend to consolidate for some time before continuing their run. So always wait for the stock to consolidate. Don't enter a stock that has already that has already ran about 30-40% without consolidating. Wait for some time, and that is when after a consolidation, maybe investors can take a new position in. This is another easy way to basically see if you are meeting with the investment routine. So investment discipline is something that is very important to have good returns from your investments. So maintain a buy checklist, selling checklist, chart patterns, base checklist, and market direction checklist. So basically, it's a checklist of stock. It's an Excel sheet where you have all these jotted down, mentioning each and every condition. That is my stock meeting the correct buy point? Is my sell condition meeting or not? Sell condition here even applies for the profit booking range. So once you see that the stock is moving about 20 to 25% and there is some technical weakness, that is when you will have to consider removing it from a portfolio. And also the other condition where you will have to be cautious is when the stock is declining by 8%. So what often investors do is, even when I was a young investor, I would even though the fundamentals are strong, I would wait and see. I would think, okay, the stock might pull back sometime, and soon, I mean, in the next couple of weeks, I would see that the stock would have already fallen about 15%. So always see that, stick to some selling discipline, which will help us limit our losses and also conserve our portfolio. This is the checklist I was talking of. Prepare an easy Excel sheet which has the company fundamentals. See if the EPS rank is meeting, that is 80% or more, and EPS growth, good double-digit growth, ideally about 25% or higher. And it should also have some accelerating growth, that is add-on for that. And the sales growth, sales are very important as well, because as long as sales are sales is of the company are growing, it'll result in good earnings. And the next thing we have to identify is uh, the next thing we should identify is the market direction. So how is the market doing? Is the market is in an uptrend, or else the overall market condition is weak currently? So as we earlier spoke of, or try to stick to new investments in a confirmed uptrend or in a rally attempt, and avoid taking new investments when market is in the under pressure, and strictly uh, refrain from taking new positions when the market is in correction. Industry movement is also another important thing. We see that stocks tend to move along with the industry. 4 out of 5 stocks in an industry move in the same direction. So when you see that some industries showing immense strength, that in that industry you see 4 out of 5 stocks that are moving well ahead of the whole industry. So that is what we'll have to identify as well. The other thing we have to keep a track of is the relative strength rating, the buyer demand rating, and average price volume. So always avoid taking positions in stock which have low market cap and low liquidity. So always we at MarketSmith India follow a liquidity criteria of 60 lakhs and market cap of 600 crores. Chart analysis, that is technical analysis, another important thing which we have to keep in mind. As we spoke of earlier, breakouts are something we have to look forward to when we are taking new positions. Avoid taking positions which in stocks which have already given good returns since its breakout. Always consider taking positions within 5% from its pivot, that is 5% from its consolidation. Once the stock breaks out of the pattern, and if it rallies about 5%, if it moves about 5% or higher than that, that is when we should ideally not consider taking positions. However, 1-2% over and above that, we can consider doing that. Another important thing we should keep a track of is the base count. So stocks which are already at the base of 4 or higher, we should generally avoid taking positions in those stocks, because 4th stage or higher base is considered to be risky. These are the ones which are already extended too much, and we should ideally take positions in stocks which are currently breaking out of first or second stage base patterns. Now talking of the sell checklist, these are quick, simple rules. That is stop loss rule of 8%. Stick to, however good the fundamentals of the stock might be, stick to the sell rule of 8%. We have seen in the past as well, there have been many instances where though the fundamentals of the stock have been good, depending just on the sell rule of stop loss 8%, we have avoided steeper losses. So always stick to this cell rule. It will help us uh, preserve capital, and also let few stocks eat away the portfolio returns. Another rule that we would investors would should abide by is the 20 to 25% profit booking range. So as I told, in research we have identified that most of the good stocks that are fundamentally good stocks, they tend to run about 20 to 25%, after which they again tend to consolidate. So that is the time once they have moved about 25%, we may consider moving our capital from those stocks to the ones which are showing strength or which are having new breakouts. So instead of keeping our capital into consolidation, we can move it and get better returns from those positions. However, there's an exception to this. If we see a stock that has moved up about 20% or more in less than 3 weeks, that is when we would like to wait for 8 weeks, or we should be holding it for 8 weeks and see if the stock can move further up. And also when we're talking of the profit booking range of 20 to 25%, Here we have to be a bit judgmental. We have to see if the stock is showing some technical weakness. Though the stock has moved about 20 to 25%, even though we see that there are stocks which rise further up. In this case, we have to monitor our portfolio strictly and see that if there are back-to-back down days on high volumes, that is when we should consider this as a sell signal and try avoiding any further losses from there.
We often speak about chart patterns, breaking out of the sound-based patterns charts. We'll talk about different bases which generally stock tends to make before it breaks out. So the first one is the cup with handle pattern. So basically, for forming this cup with handle pattern, the stock has had to have a prior price uptrend of at least 30%. As you can see here, a prior price uptrend of at least 30%. Then there would be the stock would make a all-time high, which will be termed as the old high in respect of the entire pattern. So after the stock has made a high, it would usually correct about 20 to 30% from the peak. As you can see here, when when it falls down, it would start making a cup and then it would make a handle. So ideally, the stock usually corrects 20 to 30% from the peak, but this correction could be as deeper as 50% when the market in a bear market, when the market is in a downtrend or is not doing well. So this base length, as you can see, should occur over at least 7 weeks, but can last much longer. So 7 weeks, at least 7 weeks should be there when there is a base formation. So after this, if you see, the handle should form in upper half of the cup. Basically, upper half of the cup, the handle should form, and it should be within 15% of the old high. So old high was here. So when it's forming a handle, it should be within 15% of this. So if you see this, it's roughly 15% of the old high. So usually the buy point usually occurs when the stock moves up through this handles high on a heavier volume than normal volume. As we have been speaking about the volume should be at least 50% above the stock's average daily volume. So this is where the buy point occurs. And this handle usually when there is this handle formation, it takes usually 1 week or more to form this handle, and the downward drift could be usually it is 8 to 12%, but again, as in bear market, it could be even more than that, and it can go up till 20 to 30%. And even when there is a handle formation, the volumes usually dry up in this portion, in this low area of handle, the volumes usually dry up. So this is the cup with handle pattern. When the stock breaks out of this cup with handle pattern, it usually tend to have a good run post breakout. So the second base which we'll talk about is the double bottom. We just observed Piramal Enterprises, which broke out of double bottom and had a run of about 152% post breakout. So now we'll see how does a stock make double bottom. So in this case also, the stock is having a prior price uptrend of at least 30%. Then it makes a high, which will be termed as an old high. After that, the stock would correct about 40%. So it's basically ideally more than cup with handle pattern. But then again, during the bear market, it could correct even more. Here also the length of this basis should be at least minimum 7 weeks, but it could last longer. So now we will identify where is the buy point for this particular pattern. So the buy point occurs in the middle of this W. If you see, this is actually a W, and the buy point occurs in the middle portion of this W. So this is the buy point, and the volume should be at least 50%, as I have been speaking all through this webinar and even in the previous webinar. The volume is very important. Volume should be, ideally it should be more than 50% of the stock's average daily volume. So, and one more criteria which you should see for identifying the base as a double bottom is the second bottom here. It should undercut the first bottom. If you see here, it's undercutting the first bottom. This is the first bottom, and the second bottom is undercutting the second bottom. So this is the criteria for the stock to make the double bottom base pattern, and this is the ideal buy point. Once the stock breaks out of higher volume from here, it usually tends to run 20 to 25%. So this again, the third base pattern which we'll talk about is the flat base. So the flat base is usually the is made when the stock consolidates for a while. So again here the stock would have a prior price uptrend of at least 30%. So this is common in all the four bases, all the four patterns. So stock will have a prior uptrend of 30%, then it will form a high, and then after forming a high there would be a correction. So this is common in all the four patterns which we are talking, and the last one which we'll be talking about. So here also the correcting would be, the difference among different patterns is the shape obviously, and the second would be the correction percentage and the length of the base. So here the correction would be a bit milder compared to the other two base pattern which we spoke about. Here the correction would be around 15%, not more than 15% from the peak to the bottom. If you see here, this is the depth should be 15%. And this again, it would make a high again. There is a correction of 15%, so it would follow like this for a while, and it would form a pattern. So this would look like a consolidation, and this is called the flat base. So here also, here the base length would be it should be 5 weeks long. And now let's see where the buy point occurs. The buy point generally occurs when the stock clears the peak of the base. So this is the peak. It clears the peak of the base. Volume should again be at least 40 to 50%. Ideally 50% is the volume which we are looking for. So this is the buy point. Once the stock breaks out from here on a good volume, it usually have a good run, had a good run, and this is what we should look for. So the last pattern which we'll be talking about is the base on base. So in this base pattern also, there would be a price uptrend of at least 30%. Then there would be a high. Then there would be a formation of a cup here, cup with a handle, and then there would be some consolidation. If you see this, so the two bases are pegged together, which is the cup with a handle and a consolidation base. So both the bases are clubbed together, and then we get this base on base. So first, market weakness is basically once the stock breaks out of cup with a handle pattern, you would have ideally taken a position as the stock broke out with a high volume post this breakout. Then you see the stock consolidates for a while. So this is the point of time where a lot of investors would feel that the stock is consolidating, and what they should do once the stock starts consolidating. But once what we have observed is, buy point will again, the stock would consolidate for a while. So this is a base on base. The two bases are clubbed together. Again, once it fulfills the criteria of the consolidation or the flat base, the stock will again have a buy point. It will usually the stock breaks out from here, and again it has a good run. And if you see if you notice here, the later bases will usually find support at the top of the prior base. So the consolidation which is happening is actually happening above the price, almost above the price where this handle of the previous base is being made. So once the stock breaks out from here, it usually gives you a good run going forward. So this was the four bases which we usually observe about the stocks.
Now that we have learned about how to identify a base, this is a checklist of if the stock is fitting the base criteria or not. First thing we'll have to identify as usual is the market condition, if the market is in a confirmed uptrend or no. So the stocks which are breaking out around the time when the market is in correction, or else the time when the market is under pressure, that is the time we have to be very cautious, because we might have few stocks that might break out of patterns around that time. However, we have to be cautious and wait for the overall market condition to improve before taking new positions. And the next checklist we can see is, next point on the checklist we can see is, can you identify the type of base? So as we have just seen a while ago, so there are different depth and weak criteria that the base, the consolidation needs to meet before it can form a pattern. It also, we should also identify the number of days or weeks the stock has been forming a pattern, that is the consolidation pattern. And other than that, the other criteria we could observe is how is the price strength of the stock doing. So if there is some improvement in the price strength rating, that means that there's some demand for the stock and the stock is showing some upward movement. So price strength is basically calculated with the price movement as well as the volumes on that particular up day or down day. So if the price is moving higher with higher than 50-day average volume, that is when you see a drastic improvement in the stock's price strength or the relative strength rating. So when you see that the relative strength of the price of the stock is moving higher, then that is a sign of strength that the stock is showing. We can also consider two other points here. We can see if the stock is finding some support at the 50-day or 200-day moving averages. So 50-day average is a short-term support, basically, where the stock generally tends to find support and move higher than that. And 200-day moving average is a longer period support level, around which the stock might find deeper support. 200-day moving average is very crucial for a stock, because if a stock falls below the 200-day moving average, that shows a real weakness in the stock, and there might be it might breach of all the support levels for that stock. So we have to avoid taking positions in stocks that are trading very near to the 200-day moving average, and be very cautious in stocks which are just around the 50-day moving average. Speaking of the market condition again, to reiterate, so overall market movement will basically affect our positions. We see that market movement is made of individual stocks. So as long as the stocks within the market are doing good, it will sum up to our overall market movement. So always invest in stocks, take new positions in stocks when the market is in a confirmed uptrend. That is ideally a green signal for us to make new positions. And however, we have to be a bit cautious when the market is under pressure. That is when the market starts to show some weakness, and that from there on the market condition can also move into correction. So be very cautious to avoid taking positions when the market is under correction. So this is MarketSmith India's 2020 challenge. So this is a quick assignment that we can basically take on a daily basis. So on an average it takes about 20 minutes or so in a day, and once you incorporate in your investing routine, you will find it easier for you to track your portfolio and also track the market in the long run. So the first step here is reading the daily big picture. In the daily big picture, we give our market outlook, what all has affected the market on that particular day, and what is our outlook for the market. number of distribution days, and how is the market heading forward. So those are all given on the market commentary. The second part of the daily big picture, we talk of the portfolio, how our portfolio is trending, any new additions made to our portfolio, any new removals, and the stocks which are showing some weakness, and the stocks which have released their earnings updates. Even we have a small section for that. So that is where we can identify stocks that have potential, that are potential buys or sells. So the other thing where we can scan stocks is on our chart list, that is the IND 47 list. So this chart, basically this list you can monitor every Monday, because this is a weekly, this is updated every week on a week to week basis. So in the past week, whichever stocks have shown strong price volume action, those are the ones that make it onto this IND 47 list. This is ideally a place where we can identify the future good stocks. However, this is algorithmically generated list, and we have to be a bit cautious, and we have to understand the company's fundamentals. And otherwise, we can also look at the model portfolio section, where we have recommended a few stocks based on our research, and we feel optimistic about those stocks. So that is where we can go through. Other than these, we also come across yeah, we also come across few addition removals on a daily basis, depending on the breakouts and the price movements. So we can also keep a track of these reports as and when we publish our addition reports. If you can please go through those reports and see if they are worth investing in, and taking positions in. So that is about the 2020 challenge. On an average, it might take about 15 to 20 minutes on a daily basis. And once you get a hold of this, then it might become really easy to keep a track of your portfolio. So that is about today's presentation. It is all about summing up what we have done in the past 10, 11 webinars. This is more or less about canceling methodology. So in case you have any queries, we would like to take those questions up now. Please post it in the chat box. The question says, where does one find top 40 to 50 industry groups in MSI app? So, so if you go onto the details tab of the stock, basically if you're going onto Piramal, and if you can check the details tab, let me quickly go on to the slide where we've shown Piramal. Yeah, right, over here. So if you can see, here the group strength is shown. So at MarketSmith India, we have divided the groups into numerous subcategories. That is why it is basically 197 groups. Over here, we can find the group rank of that particular stock. So if the stock is, if the stock's group rank is higher than 40, I mean more, if it is within 40, that is when we would like to take a position in the stock. Otherwise, we have to be a bit careful and look into the industry story, and that is when we have to take a new position. Any further questions? There's a request here. I see that if you can please share the checklist with the parameters in a downloadable format, it would be great. Sure. For the checklist, you can please mail us. You can maybe post a query on Ask MasterSmith from your mail ID. We can attach a checklist and send it back to you.
YouTube channel.
Just a minute. Let me share the YouTube channel on the chat. If you can see the on the screen, you have on YouTube. If you can go and hit MarketSmith India, and that is when you can come across our YouTube channel. And also otherwise, we have our videos on the app as well, application as well, under the learning section.
So tell them that today's webinar.
So today's webinar will be posted on the YouTube channel within 2 days. So this, I see another query here. With regards to Piramal, not sure that all your parameters were met. So the Piramal chart which we have seen a while ago, that was pertaining to the recent chart. However, the example which we have taken for this our presentation, that belongs to a chart that is around mid of 2016. So around that time, the fundamentals and technicals of the stock look really good. The stock was delivering a strong top line and bottom line growth back to back. And also after a phase of correction, we've seen that the stock has showed some strong price volume action and broke out on good volumes to give us good returns. I see a question here. Can you show by analyzing a stock which is in the current list of MSI India 47? Okay. So as I already told, this MSI IMD 47 index is a algorithmically generated list where the stocks are not, it doesn't have any human intervention in it. It is basically a software generated list where it identifies all the stocks which have shown strong price volume action in that particular week. For example, the list which you see now basically has all the stocks which have showed some strong price volume action in the past, in the last week. So the stocks which are showing good action in this week, you'll be able to see that list on Friday night or else by Monday morning. So this is a list. However, if you want to see the stocks which we have analyzed and which the research team has analyzed manually, those are the ones which are seen on the model portfolio section. Okay. Any possibilities of conducting workshop number 2 anytime soon? Yeah, basically we would like to see if we would have another couple of sessions, new sessions now. After that, we might go back to having a few refresher sessions where we might take topics from the past and have a webinar on it. Okay. I see a question from Kunal. So basically, I followed the 20-25% profit booking rule on three of his positions. However, I feel I might have hurried a bit. So it often happens. So as I told you earlier in the presentation, this is more of a judgmental call we'll have to identify stocks which have hit 20 to 25% profit booking range, and we'll have to see if there are any serious sell signals. Like, though it's a profit booking range, it is ideally conservative investors could have booked all profits in it. However, what investors can do is we can monitor the stock closely, see if there is any huge sell-off, if the stock is falling tremendously on really high volumes. Those are the sell signals for us. So we should basically identify them, and that is when ideally we would have to end the position. So at MarketSmith India as well, though the stock hits 20 to 25% profit booking range, we would like to wait for some time and see if there is any technical weakness before removing it from our portfolio. May I also know the holding period for the stock which you have got about 20 to 25% returns? It also depends on the holding period. So basically the stocks which have ran about 20 to 25% within 2 to 3 weeks, then you should have ideally hold it for about 8 weeks. Otherwise, if the stock would have returned about 20 to 25% post 3 to 4 weeks.
So as I could see that you had a holding period of less than 4 weeks, so ideally you should have holded it for the next, if it was within the 2 to 3 weeks, you should have holded it for the next 8 weeks. So this is one of our sell criteria. This is one of our canceling criteria. So maybe that you should have followed. So we are sharing one registration link where you, if you haven't attended any, if you want to attend a basic canceling seminar, you can just register yourself there. It's a paid seminar which which is happening on 22nd of this 22nd July, 22nd of this month, as of now. So we have shared the link in the chat box. You can just register using that.
The seminar will be held at our office in Bangalore. It's basically once in a month, and it's a 6 hour seminar, which you'll have an overall view of the canceling methodology. So it will be held at our office. Okay. Is it an online seminar? No, it's a face-to-face seminar. So therein you'll have to come down to our office, and we can have a lot of questions as well. It'll be a face-to-face seminar where our research analyst would take you through the canceling methodology, and it'll be more interactive session where you can post your queries as and when you get any doubts. I see that there is one, you'd like to have it in Mumbai. So I'll share this with my project director, and we'd like to have some seminar in Mumbai as well. Maybe soon we'll have some webinar or a seminar in Mumbai. So I think that's it for today's webinar. We will meet back 2 weeks from now again with an interesting topic. The next topic is really interesting. So hope you are tuned to it, and thank you for attending the webinar.